This is the Biz News Podcast, one-on-one conversations with experts in business and personal development.
What can we learn about insurance from Goldilocks, Rapunzel, Humpty Dumpty, and even old Mother Hubbard? Well, Chantal Roberts knows. Miss Roberts, who calls herself an insurance nerd, has written a book putting lessons about insurance into major rewrites of traditional fairy tales. She says that insurance, just as in fairy tales, nursery rhymes, and fables, what appears to be an innocent story often contains a deeper message. She says if you want to know what's actually going on with your insurance, you need to examine the small print and read between the lines. She joins us for this episode of Biz News Interviews. You call yourself an insurance nerd, and you've written a fairy tale book about insurance. But Chantal, for many people, insurance is not a fairy tale, it's a nightmare.
It is.
So what can we learn from the likes of Goldilocks, Humpty Dumpty, and all the other characters you have in your book?
Well, I started thinking about this, and my passion is to help people understand the insurance and the claims process. So about 1% of people are happy with their insurers. That means 99% are not happy. And I wondered how we as the insurance industry could do this. And that would be through stories, because every culture, every religion, we all have stories, and we understand stories, and we remember things through stories. We learn things through stories. And so I thought if I could give these concepts in a way and through a story that all of us are already familiar with, we might just, have a meeting of the minds.
So you picked fairy tales. Give us an example of, let's go to one of our favorites, of course, is Goldilocks. How can you go wrong with Goldilocks?
How could you go wrong with Goldilocks? I actually use Goldilocks and Rapunzel together. And those two are excellent examples of what a landowner's duties are to people who enter onto that person's property. You have a trespasser, you have an invitee, and a licensee. And both of these stories deal with trespassers, because Goldilocks and the prince are both trespassers. However, the duty of the enchantress to the prince is completely different than the duty of the bears to Goldilocks, because Goldilocks is a child. So I want people to understand that, you may have slipped and fell in the grocery store or something to that effect, but that does not necessarily mean that there is liability for your claim, or that the grocery store is at fault or something to that effect. And it is my hope that people can help understand that. And maybe we don't have as much litigation. Maybe we do, but maybe at least people begin to understand or begin to ask questions and get more information.
You talk about something in the book called finding dice. We're not gambling, are we?
No, because insurance does not pay for gambling. It only pays for your fortuitous losses or by accident. But
wouldn't that be a popular policy to sell, the gambler's policy?
That would be fantastic, wouldn't it? I would definitely take that out, because I have no luck whatsoever. But I use dice. Even I used it with my claims adjusters when I was a claims manager, and I use it with my risk management and insurance students to help explain the overarching setup of a policy. Because I don't know if you've looked at a policy lately, they are hard to understand. And, there's a little bit over here and there's a little bit over here. You have to read your whole policy to understand what's covered. So we need to set up and do a frame around how we're going to do that. And that is diced. That is your declaration page and your definitions, your insuring agreements, conditions, and then exclusions and endorsements. And that's your overarching way to look at a policy so that you can figure out where everything is.
These things are obviously written by lawyers, but they're also written in plain English. Is that safe to say?
Oh, I used to think that. And I used to think that, yes, it was supposed to be in plain English. And I started doing some research in on it. For example, Texas says that you have to, that the policy has to be at least college level, no greater than college level. So you can't have a postgraduate kind of level policy or something to that effect. Colorado says it needs to be at least high school level in understanding. But I gave this to my risk management students and said, hey guys, let's learn how to read a policy, 10,000-foot view. What do you think about exclusions being on page 16 and on page 12 and on page 3 and on page 18? And why do they do this? And blah, blah, blah. And it took them about 14 weeks to finally realize that, oh, insurance is a lot more complicated than what we thought it was going to be. It doesn't pay for everything like we think it should. So if it took them 14 weeks, I'm hoping maybe it won't take 14 weeks for someone to read the book and understand a little bit more. But but yeah, your policy is written by attorneys. It is difficult to understand, but I'm hoping at least if you read the book, learn about dice, for example, you will know enough to be dangerous and go to your retail agent, the person who sells you insurance, and start asking questions.
One of the things that pops up in the news a lot these days is the ability or lack of ability to buy property insurance, whether you're a homeowner or a small business. In some states, because of so many natural disasters, it's becoming almost impossible. Comment a little bit about that.
Yes, I do wish I would have remarked on this in the book because that was going on, but it was just beginning when I started writing it. We are now we are in what is called a hard market. We have been in a soft market for insurance for the past 20 years. And so basically a whole generation of us have forgotten what it's like to be in a hard market. And that means, of course, soft market means that insurance was plentiful. Premiums were low. Everything was good. Business was booming, but the pendulum has swung back to the other side, which is the hard market, which means we can't get insurance. Insurance is hard to find now. People are being turned down for it. Premiums are high. Myself, I haven't had a property claim in probably 5 years, and my insurance went up $800, you know, and I live in Kansas. I can't imagine what Florida and California are going through. So, that is what we're going through because, and I'm going to try to oversimplify it just a tad because it is very layered. And that's another problem with insurance is that there are so many things that go on and impact your insurance. But to oversimplify everything, insurers usually make money off of two things. That's their investments and their premiums. They take their premiums, they split it out a bunch of different ways. They put a lot of money over into investments, and it has been these investments that have been carrying the insurance companies for these past 20 years. Now, the issue is that our stock market tanked in, 2008, and then, it did a little poorly, I think, in the teens and blah, blah, blah. That's all caught up with us now. We've gone through all of our reserves. So now we're having to increase our premiums, and it is a little bit of a shock to the system.
A shock to the system, that's putting it perhaps mildly.
Yeah.
Are people, like say for homeowners, do we over-insure ourselves or under-insure ourselves? How do we know what's right?
Historically, everybody has been underinsuring, and I have read that nearly every single one of us are underinsured anywhere between 25 to 400% underinsured. And what that means is we are not carrying enough insurance. In fact, I was talking to a reporter the other day, and they wanted to know what could homeowners do to reduce their premiums. And I said, oh, you're probably not going to like my idea, but I'm actually going to advocate for having more insurance, because the issue is if you do not and you are underinsured, you have to pay a pro rata portion of your loss in addition to your deductible. So you could end up paying another $10,000, another $15,000 out of your pocket. And nobody wants to do that. I personally would much rather spend another $800 a year in premium than come up with $15,000. That's just me. That's just me.
That's not exactly anybody's pocket change, I guess.
No, yeah, that absolutely. And that's one of the reasons why I'm so impassioned about this project, is because a lot of people don't know this. A lot of people don't understand this. Co-insurance and being underinsured is really difficult. You asked what could people do and how do they know? That is, of course, very difficult as well, because 9 times out of 10, we find out about it after the loss has occurred, and that's too late. So what I say in my book is, well, you need to think about maybe having a contractor write an estimate for you that says, this is what it would take right now to rebuild this house from the foundation up. And that's what it is. Especially during the pandemic, we all did house projects. We built that porch, we put in marble countertops or whatever. That all increases the value of your home. So
and
all
there
of
they
that
go
stuff.
in the next F3 tornado off to perhaps Nebraska in your case.
Exactly. Yeah. So, talk to your agent. They can possibly see about something. Get a contractor out there to write an estimate of what it would take, would be building your house from the ground up, because the thing that must be understood is the insurance value of your home is not the retail value of your home.
Would you explain the difference, please?
Yeah, absolutely. So I happen to live in Overland Park, Kansas. It is, I would say, one of the most expensive areas. I've read articles about most expensive areas in the United States. We're very bougie here in Overland Park. But, I've got a 4-bedroom house, right? And let's pick this 4-bedroom house up and let's put it in Los Angeles, California. Well, it's probably going to be a $3 million home in Los Angeles, California, whereas in Overland Park, Kansas, it's a $300,000 home. But if I move it to, I don't know, North Carolina, rural North Carolina, it might be a $150,000 home. So that is your real estate or your retail value, because that is all about location, location, location. Now, what your insurance value is literally what it would take to rebuild that house. Strictly speaking, a 2x4 costs the same as a 2x4 costs the same as a 2x4. Now, there's going to be differences in zip codes or whatever, what state you're in, if there's a catastrophe going on or whatever. But those materials usually cost the same in that particular area. So if I move this house around in the general area that I'm in, it's always going to be the same. And that is your insurance value. And that's why I say it needs to be what a contractor could do to rebuild that house foundations up. Like how many 2x4s do they need? How many windows do they need? How many shingles do they need? That kind of thing.
Oh my, this is becoming not a fairy tale, but indeed that nightmare we wanted to
Oh,
avoid.
I was trying to avoid that. But I really want you to be protected. I don't want you to have to pay out of pocket.
Well, one thing that business owners worry about is liability.
Yeah.
It can be that slip and fall somebody, or a can of tomato soup bomb pop somebody on the head. In the case of media, it could be something we have missaid.
Yes.
Its liabilities lurk like little snakes in the bushes as you walk down the path.
Yes. Yes. Liability. I happen to like liability. I think it's very interesting. And I have a whole section on liability. And in fact, I talk about how to determine or how adjusters determine liability, the things that they look at to determine liability. And I use, again, the ABCD rules. It's a duty owed, much like what we were talking about with Rapunzel and with Goldilocks. Did that duty that was owed, was that duty breached? Was the breach of that duty the proximate cause of the damages? And so that helps a claimant, a third party claimant who got the tomatoes falling on their head or they slipped and fell or something to that effect. That helps the claimant understand what the adjuster is looking at when they're asking all of these kind of questions.
Let's give our listeners and viewers the name of your new book again.
Sure, it is Once Upon a Claim, Fairy Tales to Protect Your Assets.
Now, where can our listeners and viewers get more information about you and your services?
Absolutely. You could go to our website at tilting@windmillspress.com. That's the publisher, Tilting at Windmills Press. And they could definitely order the book through indie bookstores. We support indie bookstores. You can order it through Amazon if that's what you prefer, but you can get all that information on the website.
And what would you like to add that we have not been able to terrorize people with just yet?
Oh my. I would say when you have a claim, understand that the adjuster is a human, of course. And I know that that seems self-evident, but this is one of the reasons why I'm writing the book is we get very impassioned about our claims, don't we? We This is maybe the first time our house has burned down or the first time that we've been in a car accident or something to that effect. And for the adjuster, it's the 15th time today that we've dealt with someone who has been in a car accident. So we may seem callous, but we are not. It could be just that our husbands yelled at us or the kid is sick or whatever. And if you have a problem, please try to flag down your adjuster and stop them, because sometimes we go on automatic mode, and get us to listen to you. And barring that, you can talk to your agent to try to get some, relief. You could talk to the adjuster's supervisor, or you can read the book and maybe find out why the adjuster is asking such weird questions and asking for such weird documentation, which is what I'm trying to help you do.
You've been listening to the Biz News Podcast. We welcome your input. Send your email to editor@biznews.com. That's bizgnus.com. Thanks for listening.